Hello traders, welcome to our latest episode of Kingmaker Trading. I am Sanka, and today we are going to start a video series I specifically designed for beginners in Forex. It's called Ultimate Beginner's Guide for Forex Market. So this video series contains three major parts, and the first one is the one that we are going to cover today, the introduction to Forex, which includes what is Forex, what is a pip, what is a tick, and what's a currency pair, and what is price, and all that sort of basic stuff. And in the second episode, we are going to talk about candlestick analysis, how a candlestick is formed, and what are candlestick patterns, how to read candlestick patterns, and how to use candlestick patterns in trading, and all that sort of information. And in our last episode, we are going to talk about market structure, where we will cover trend, support and resistance, major structure levels, identifying market structure, and all that sort of stuff. So if that sounds beneficial to you, please subscribe to this channel and like and share this video for me. And now let's get onto our content. Alright, so now we are going to start our first episode of Ultimate Beginner's Guide Introduction. So that is our first lesson, is Introduction to Forex. So let's start this lesson with talking about what is Forex. So Forex, FX, foreign exchange or currency market, is basically a marketplace used to trade one currency for another. So these are the names that used to describe the Forex market: FX, foreign exchange or currency market. So it's basically a marketplace used to trade one currency for another, which means giving a value of a certain currency and getting back the equivalent value from another currency. So why would we want to do this? So let's talk about that. Forex assists international trading and investments by enabling currency conversion. So what this means is almost every country in the world is now trading internationally, trading with international companies, buying and selling their goods to international companies and other countries, and they invest in international companies. To do that, they need the currencies of the other countries. So for that, we need to be able to exchange currencies. So Forex has given us a chance to change one currency into another currency. That is why Forex is very important in global finance. Alright, the last thing to know about Forex is currencies are traded as pairs in the Forex market, which means there should be two currencies, two major currencies, in order to make a trade in the Forex market. So now let's talk about what makes the Forex market unique, apart from other financial markets. Apart from financial markets. Alright. Now, Forex represent the largest asset class in the world, leading to high liquidity. What this means is that Forex market is the largest marketplace in the world. It is bigger than any other financial market. The market liquidity is a market's feature whereby an individual or firm can quickly purchase or sell an asset without causing a drastic change in the asset price. So, uh, liquidity. Liquidity means that liquidity means what I just said, and if certain markets liquidity is high, it means that an individual or a firm can quickly purchase and sell an asset without causing a drastic change in the that financial market. So Forex is a larger players game. Big banks, big companies, organizations, and big players are in the Forex market. They trade multi-million dollar accounts. So compared to them, we are retail investors, and we have accounts that very small. So because of that, we can purchase or sell an asset uh, very quickly, and it won't affect the asset asset price drastically. All right, I hope that makes sense. All right, over $3 trillion a day is traded in the forex market. Can you imagine what a trillion is? Here is it. 1 trillion means 1 million of millions. To make this more clear, let's take an example. According to researchers, there are 50,000 grains in a kilo of rice. So let's assume that if you have 1 million grains of rice, then it is about 20 kilograms of rice. You have 20 kilograms of rice. But if you have 1 trillion grains of rice, it is equal to 20 million kilograms of rice. Yes, 20 million kilograms of rice. Now you can understand how big a trillion is. In the forex market, over $3 trillion a day is traded. That is very huge. That is why the liquidity of the forex market is very high. All right. The next thing makes the forex market unique is no geographical boundaries, which means forex market is not limited to a country, a rain, or any geographical location. If you take a stock market, it is limited to a country, but forex, it is not limited geographically. All right. The next thing makes forex market unique is market is open 24 hours a day except for weekends when market is not open for trading. But even in the weekends, forex market is active. Even though we can't trade in the weekends, forex market is active in the weekends. That is why we can see price gaps in the market when the market closes on Friday and reopens on the Monday. So now we covered the basics. Let's move on. Now we are going to talk about a currency pair. A currency pair has two major currencies in it. So let's take dollar Canada. In this one, the first currency in a currency pair, in any currency pair, it doesn't have to be this one. In any currency pair, the first currency is called the base currency. Okay, the second currency here is called the quote currency or the counter currency. Okay, right. These are the major two currencies in a currency pair. So now if we take this dollar Canada chart, now it's Sunday, so market is closed and it's currently trading at the price of 1.34509. okay, so price is trading at 1.34509. What this means is that we need 1.34509 Canadian dollars to buy $1, one United States dollar, one US dollars. Okay, let's get further into this. So where did it come from? Let's talk about that. It came from this equation. The price equals to current value of the base currency divided by current value of the quote currency, which in this case 1.34509 is equal to current value of the dollar divided by current value of the Canadian dollar. Okay, from that we can get 1.34509. We multiply both sides by current value of the Canadian dollar, then we get this equation, which is 1.34509 multiplied by current value of the Canadian dollar is equal to current value of the United States dollar. From this we can get an idea about how currencies are traded. So what this means is we need 1.34509 Canadian dollars in order to buy one US dollar. Okay, so let's talk about what is a pip and what is a tick. So you saw the price earlier in our dollar Canada example, right? Pip is the unit that is used to measure the price movement in Forex. Okay, let's talk about this now. The price was in that dollar Canada pair was 1.34509. In this price, you can see there are 5 decimal places. 1, 2, 3, 4, 5. 5 decimal places are here. In this one, the last decimal point, this is called a tick. The 5th decimal point, the last one, is called a tick. And the 4th decimal point, this one is what called a pip. Okay, so that gives us the relation between a tick and a pip, which is 10 ticks are equal to a 1 pip in the Forex market. In most of the pairs, that can vary from a market to another. So let's assume that the price moves from 1.34509 to 1.33509. Okay, that is a movement of 1000 ticks or 100 pips. That is equal to a change of 1 Canadian dollar cents. 1 cent difference in Canadian dollar is equal to 100 pips or 1000 ticks. So I want to tell you something in this place. If you use MetaTrader platform here, I'm currently in a trade here, so my take profit is at this point. If I take my mouse to here, you can see that it shows the profit target is 1481 pips, but it's not true, because it's not 1481 pips, it's just 148 pips. Okay, why this is showing a tick as a pip is because when the time the MetaTrader platform was coded, there were only used 4 decimal points in price to trade. So then at that time a tick was equal to pip, but now we use 5 decimal places to trade, so 10 ticks are equal to 1 pip, but the source code is remain unchanged. That's why this MetaTrader platform is showing a tick as a pip, but in reality this is 148 pips. Okay, all right, let's move on. Now let's take a look at a price chart. This is the price chart that we saw earlier in this presentation. In this we have the price axis, where we can see the current market price and all the prices. Okay, this is price axis, and down here we have the time axis. Okay, this is the two major parts in a price chart: price axis and time axis. Okay, traders, now I think you know what is forex, what is a pip, what is a tick, and everything you need to know basically in order to get into forex trading. So thanks for watching, guys. Please, if you make it to the end, like, comment and subscribe to this channel. Please share the video for me, and see you in the next video.